Hi, Andrew Cooper, Advice for Living Financial Planning. Just 3 items today. One is a market update, also some information about CBA, and also an organisational arrangement. Now, first thing, some of you may have seen or may have had letters sent to you or emails. If you've got Commonwealth Bank shares, there is a Commonwealth Bank share buyback offer in place. And maybe you're wondering, should you take it up or should you not? We've had a look at it. My view is that unless you particularly needed the money, I wouldn't be participating in the share buyback. What it will mean is that there will be less Commonwealth Bank shares available, which means that they will be inherently more valuable. And it also means that for the same amount of dividend payments, because there's less shares, there will be bigger dividends. So my thoughts would be, as I say, unless you particularly need the money, and I'm not aware that anybody in our client base does, I would be inclined to simply ignore the share buyback. As I say, I think it will actually benefit you in the long term. So that's my thought. That's my thoughts on that. Second item is an organisational one. In case any of you have been reading the finance pages, Financial Review, Australian, that sort of stuff, you may have seen that on Wednesday of this week, an organisation called Centrepoint Alliance bought out another organisation called Clearview. Now, Clearview is the umbrella organisation for our back office, Matrix. Clearview is made up of the Clearview Wealth Solutions and Wealth Foundations. Some of you are actually in Clearview super and pension accounts. It also includes the Clearview Financial Advisors, Matrix Financial Advisors, and also another mob called La Vista Financial Advisors. So what has happened is that Centrepoint Alliance has actually bought out the advisor network. So La Vista, Matrix, and Clearview advisors will now become part of the Centrepoint organisation. Now, what it means for you is actually, as far as we're aware, nothing. We will simply now be part of a bigger back office, you might say. Centrepoint is basically consolidating a number of advisor groups, because with the increased government regulation and fees, it's becoming more and more expensive to run a back office. So, like Matrix has got about 100 advisors, I think, and that is it's showing that that's not enough. It's not big enough to be effective financially for them. So that there's as I say, so the Centrepoint mob are just buying out advisor groups. As I said, from our understanding, we weren't aware this was going on. From our understanding, there will be no changes to any of our arrangements. All of our systems remain the same. The people that we work with is still the same. We're just basically under a larger umbrella group. So if you did happen to read anything about it, basically, from what I can see, and we've been speaking with our contacts at Matrix, is that basically there's nothing to see. It's what I think all will happen is probably I think it's going to, the integration will take place over 12 months, and probably at some stage you'll get another financial services guide that'll just tell you that Matrix is now part of Centrepoint Alliance. So that'll be about it. So no need to worry. Last point is markets, and of course particularly share markets, which continue to amaze all of us who are involved in any way in the finance industry. There has been talk about corrections. The market still seems to be defying that. The only issue that there is a concern is that although markets are reaching higher and higher levels, they are doing it with less and less companies involved. So if you can imagine, instead of the whole market moving up to a new high, it's only a limited number of shares whose share prices are very, very high, who are basically pushing up the average. And again, so that is some concern that there isn't broad that there isn't sort of a broad increase in share prices. But having said that, investments are still going up. Things we are concerned about, we're probably a little bit concerned about mining. There seems to have been a drop in the iron ore price, and Chinese seem to be putting their foot on the brake. So that could mean that iron ore prices will come back. Whether or not that'll affect the whole market, we had initially thought there might be a correction, sort of a buy now, but the US Federal Reserve, like their Reserve Bank, is now saying that apparently they won't be doing anything on interest rates until next year. And so that could mean that this rally could continue, but once they start increasing interest rates, I would have to think that should bring about a correction in some way. So the short story is, look, it still defies logic. We're trying to be very cautious with, you'll note, for those of you we're doing reviews with, we're looking to make your portfolios a little more conservative, or at least have funds in place that in the event of a correction will hopefully minimise the damage. So we've been, as most of you know, we've been getting out of property into infrastructure. We're also looking to get out of hedged funds, so things that are in Australian dollars, because it's likely that if you've got international shares in Australian dollars, if the Australian dollar drops, which is likely, then that will basically double any issues. So we're going into unhedged funds and that sort of stuff. So we are doing what we think will protect people, even though obviously with the markets going up, we still want to make the best advantage of that, but we are trying to be cautious. So that's about it. Short story is we just don't know. But we're continuing to monitor and trying to do what we can with people's portfolios so that in the event that something goes wrong, that any damage is minimised. So anyway, that's about the size of us. From this end, here in Melbourne, as far as I'm aware, I think we're starting our 4th week in lockdown again, and somehow 200 and something or other day in lockdown. So, just what do you do? Best wishes to everyone out there. I hope you're coping as well as we all can. We're trying to do video meetings with people that want them, but I understand a number of people would prefer to have face-to-face meetings when we can do that, and so we'll be accommodating that. Of course, the issue for us is we just don't know when that will be. So if you're happy to wait, we will do those meetings when we can see you face-to-face. But if you're happy to have meetings over Zoom, or because we've been using, for those of you who have got Google accounts, we've been using Google Meet lately, and if you found Zoom a little bit difficult to work with, Google Meet we've found is very, very simple to operate. It doesn't require any software or anything. So we've been doing, for those of you that have meetings with us, we've been using Google Meet, and that's been really good. So anyway, I hope everybody's okay. For those of you, I know we've got a number of you trapped north of the border in Queensland. I hope you're in, I don't know if you want to come back. There's certainly not a lot to come back to here. I hope you're enjoying your time away and enjoying the warm weather, because down here it's rubbish and we can't even go to the footy. So there you go. Anyway, that's all from me. Any questions, do please give me an email or a call. We're still here. There's nowhere else to go. So we will look forward to hearing from people if there's anything you want to discuss. Okay, that's all from me.